Oh my god, Tesla has done it here again. They have absolutely blown all expectations out of the water. A few days ago they did just release their Q2 2020 earnings report. Yes, I am a little bit late on it, I do apologise, but hey, at least I'm doing a video on it anyway. Just a quick preview before we get into anything. They are pretty freaking good. The stock here today, filming this video after the market closed on Friday, is down quite a lot, down over like 6% on the Friday, and they had a pretty bad day the Thursday as well. Before earnings, the stock was up at like 1,600. It's dropped down to like 1,400, even though the earnings report was actually pretty good. And it just goes to show how illogical the stock market is. Doesn't always mean good news means good performance for the stock. Personally, I would just say that the stock has already ran up quite a lot. The stock market was expecting great earnings already. We got great earnings, so everyone's just decided to sell off a little bit, or people that perhaps have been in the stock for a long time have decided to maybe sell off a bit, take a little bit of profits, as it may be a little bit overvalued here right now, potentially, if you look at the current numbers. That's the reason I would say, even though these earnings that we got were terrific, the stock has dropped. But hey, I'm just speculating at this point. And I am a Tesla shareholder. We see that I'm up quite huge on my Tesla shares right now, up around about 400%. I have a pretty low cost basis there at around about $277 a share. So in today's video, guys, I want to share with you this exact Q2 2020 earnings report. We will have to have a look at all the good numbers and all the good things that Tesla has decided to share with us. And I'm going to do a full comprehensive breakdown on this Q2 2020 earnings report, and we're going to do an in-depth analysis on Tesla stock here. So as always, guys, just before we do get into it, if you are a fan of the channel, if you keep coming back to these videos and you aren't subscribed, please consider subscribing down there, clicking that red button to subscribe. Really helps me out, and if you love the content, why don't you do it? Like, come on. Also, if you did enjoy this video throughout any point or you learned anything, make sure to smash that like button. Does greatly help me out with the YouTube algorithm there as well. But let's get into it here today, guys. Now, with all the intro out of the way, I can finally say this. We got another net profit for this quarter, boys! $104 million net profit for this quarter from Tesla. Yep, 4 straight quarters of profitability for Tesla. You know what that means, right? Majority of you probably will that love the stock market or keep up with stock market investing and stock news. But if you don't, because Tesla has now had 4 sequential quarters of profitability, they now are in the running, or they do now have the chance to be included in the S&P 500 index. Now, they still have to be considered by some board somewhere with the S&P 500 to see whether it aligns or whether it fits in with the S&P 500, but they do definitely have the chance now to be considered to be added into the S&P 500 index. Obviously, if their ticker symbol does get added into the index, this would be great news for Tesla and Tesla shareholders like you and me. And if you're asking why, well, it's pretty much because the S&P 500 is pretty much the world's most popular trading index. If Tesla does get added into the S&P 500, it will just show a lot of skeptical investors that are still a bit skeptical on Tesla. I don't know why you would be, but there are definitely some out there still that this company is more trustworthy, is more respectable, and it is less risky, giving investors more confidence to invest in Tesla. More investors obviously means more buying pressure, and the stock price will increase. And just as well, the amount of people, the amount of investment funds that buy into ETFs that track the S&P 500 is just astronomical. The amount of money that's dumped into the S&P 500 is huge. It's literally trillions of dollars of assets. It would just attract more investors and more investment funds into Tesla stock, obviously creating a lot more buying pressure, which is more favourable for the stock price. So definitely great news that they were able to achieve profitability in this quarter, especially given with the whole current worldwide pandemic right now. It is just a great sign for Tesla that they were still able to rake out a net profit, especially when we look at their competitors. Look at this chart Tesla just shared in this report when it comes to the year-over-year change in vehicle deliveries for the first half of 2020 with its other competitors. Now, this chart honestly does just speak for itself. The competitors selling traditional ICE vehicles are really suffering in the current economic environment. Tesla vehicle deliveries are well up over 10%. All competitors there are down at least 20% year over year, if not even worse. This chart is great, it's really mind-opening, and it really does just show you and sell you that Tesla is the future. Given the current situation, they are still able to push out these very strong numbers, which is great to see. Now, if we have a look at the numbers that I've circled in green, here we are comparing their vehicle delivery numbers in Q2 2020 to their own numbers in Q2 2019. We can see for the Model S and the Model X, the more higher range models there, they are down 40% there year over year, which is a bit harsh, not exactly ideal. But if we have a look at the Model 3 and the Model Y numbers, the newer up-and-coming models, the more cheaper models, the more affordable models there, the deliveries are actually up 3% year over year, which leaves us with a total deliveries number being down only 5% year over year. And I mean, hey, it is still down there, but that is still not bad given the current global situation, the whole coronavirus pandemic. The world has been shaken by a once in 100 year event, so to only be down on vehicle deliveries 5% year over year, when we look at those other competitor numbers, they are a lot more respectable. Now the numbers in red there that I want to really pay attention to, we can see that they've actually increased the amount of Tesla stores and Tesla servicing locations there by 10 and 18% respectively year over year. And they've also increased supercharger stations and supercharger connections by both 28 and 30% year over year respectively as well. Both of those are great numbers, and if Tesla does want to continue to grow, and Tesla is wanting to continuously expand their business over time, they are going to need to keep those numbers up with increasing the servicing locations and the supercharger stations. Because obviously as more and more people start to buy Teslas, there's going to be more and more Teslas out on the road. They're going to need more and more of these servicing locations out there to be able to service all of these customers. So it's great to see that Tesla are still expanding out and building these locations, even in the current economic climate. Another number that I really did want to share with you guys from this report is what their operating expenses have done year over year. If we look at it, we can see that they've actually been able to cut down their operating expenses down by 14% year over year. This number, combined with them having less vehicle deliveries year over year, and then them still obviously being able to achieve a net profit, just shows how much more efficient Tesla are getting. Being able to manage their expenses, cut down their expenses, just shows that the process of them building and delivering cars is getting more and more streamlined and they're getting more efficient. This is great, I love to see it. Now they also have 3 paragraphs each here for each gigafactory in the report. All are very interesting, so we'll look at these here now. I thought they were great to read. So Fremont, the one in California, although the Model Y production line was operating for about 4 months in the first half of 2020 due to shutdowns, we exited Q2 with Model Y production running at installed capacity. This ramp was significantly faster than our initial Model 3 ramp, which took over 9 months to reach the same weekly rate. That just further proves that, like I said, they are getting more and more efficient with this process here, Tesla. It's great to see. We are installing additional machinery at the Fremont factory, which is expected to increase total Model 3 and Model Y capacity from 400,000 to 500,000 units per year. Just great news there coming out of the Fremont factory. Now, if we go to Shanghai, the Gigafactory in China there, Model 3 has received a strong reception in China, not only becoming the best-selling EV, but also competing with mid-sized premium sedans such as BMW 3 Series and Mercedes C-Class. This is not surprising given Model 3's lower price point, of course. Reduced operating costs and industry-leading standard equipment. Construction for Model Y lines in the Shanghai factory is progressing as planned, with first deliveries expected in 2021. And obviously the way Tesla are going, beating their targets all the time and getting more and more efficient, don't be surprised if we start seeing some Model Ys come out late this year and not in 2021 or very early 2021, I'd say. Now, Gigafactory Berlin, the new one that is currently being built in Germany. In Germany, one of our biggest European markets, Gigafactory Berlin construction continues to progress. As we build new factories, we continue to iterate on the factory and product design to improve efficiency, cost and technology. we're implementing further structural improvements based on our learnings from prior factories. So again, like I said, it does just confirm there that they are trying to be more and more efficient with these production lines and lower the costs, which is great to see. Look at this rendered picture here that they shared of the Berlin Gigafactory once it's built, and damn son, that looks fresh. All three of these paragraphs I just read to you are awesome news for Tesla, I think. Again, just shows how efficient they are getting and how fast they are learning. Another piece of awesome news that they shared in this report was in regards to the range with the Model S. We know from our customers that range is an all-important attribute for those looking to switch from their combustion engine vehicle to an electric vehicle. And I know if I was uninformed and I was switching over from an ICE vehicle over to an electric vehicle, I'd be like, okay, but how long does that have to go before I have to charge it? We can obviously see here though, if you are well informed or you're educated on electric vehicles here, especially Teslas, they do have a big range, but now this news is absolutely groundbreaking. Our efforts to maximise range are not slowing down. In July 2020 we announced an updated Model S with an EPA tested range of 402 miles, making it the first ever production electric vehicle in history to break the 400 mile range threshold. Now this is just crazy, and Tesla are actually out here doing these things. They're not just putting this in the report and say, oh yeah, we expect to do this in about 5 years time, here's some nice design pictures, like some other companies out there. Nicola, unlike those startups out there that are all talk and no walk, Tesla is actually showing that they can do these things, and they are proving it right here, right now, in the real world. With the first ever vehicle to make it over the 400 mile range. If you're Australian here like me, that is roughly about 640 kilometers before you have to recharge it again fully. So that's just awesome. Now really my favourite piece of news here in this whole article, to be honest, besides maybe the hype about the profitability, would be this announcement that they made about self-driving. Our traffic light and stop sign recognition system is becoming more robust as we continue to collect more data from our customers driving through intersections. As of Q2, our FSD equipped cars will either stop at an intersection or drive through it without driver confirmation when it is deemed safe to do so. Ultimately, the necessity for confirmation will be withdrawn completely. If Tesla can be the first company to fully perfect 100% fully autonomous driving, that would just be absolutely ridiculous. Again, Tesla is really doing these things right now in the real world. They're not just concepts. And the competition is leagues behind. They're absolutely years behind. They're just in the dust, mate. No chance. And just this last little thing that I thought I would like to include from this earnings report here, something that I'd like to highlight, is in relation to Tesla's solar business. Tesla don't only just make cars, they also look at the business of producing the batteries that they make for their cars, and also solar business here. So this is a cool little point that I thought I would share with the solar business. Recently we made home retrofit solar even more affordable in the USA, while also offering an increased efficiency panel. At $1.49 per watt, the average Tesla solar system is now 1/3 less expensive than the industry there. The average customer buying a large system in California will likely offset their system cost with a reduced electricity bill in approximately 6 years. We also introduced a lowest cost guarantee and money back guarantee there with their solar business. Our new pricing is made possible by several improvements, such as moving to recommending standard sizes that customers can order and blah blah blah, blah yada yada yada. Point is, like I said, they're now 1/3 less expensive than the industry when it comes to solar roofing. That is just awesome. Overall, to sum this earnings report up, it is good. It is very good. I know there were a lot of analysts out there that were expecting Tesla to come out here and make a loss this quarter or only just meet break even. But we can see they did make quite a significant profit there, which is a good sign. It's nice to see a stable profit there coming out of Tesla, even in such a terrible economic time when their competitors are going absolutely horrible. Again, I think the main reason for the stock drop over the past 2 days is just because all of this news has already been pretty much priced into the stock. We've seen then some people try to sell out and take some profits. So in the short term here, I can obviously understand why the stock is dropping, but in the long term, can see it playing out just like all us Tesla bulls would expect it to. Another bonus little piece of news here I just wanted to share with you guys as well. You may have missed it because it came out same day as the earnings, so you may have gotten lost in all of the earnings chaos for you guys, but here it is. Tesla will build the Cybertruck in a brand new factory that they plan to open in Austin, Texas. Elon Musk has said that construction is already underway on this one as well. He said that it started last weekend. Like, what? This man is going crazy. He's popping off building factories left, right and centre. They plan to build the Tesla Semi there as well, as it's going to be one of the biggest development projects in history for Austin, Texas. Literally, Tesla are investing like $1 billion into this project. Absolutely ridiculous. It's obviously going to create so many new jobs there in Austin, Texas, and it's going to be a great economic development there. Great news for Tesla as well. Now, the question that you're probably asking me there right now is, will I sell my Tesla shares? Am I going to be buying more Tesla shares? What am I doing with my Tesla shares? Fair enough, good question. Me right now, I'm obviously still holding, still a long-term bull on Tesla, still see this stock going way further and the company expanding a lot more still a lot more to go. As I've said before in my previous Tesla videos, and I'll link the last one up here if you want to go and watch it, but as I said before in my previous Tesla videos, if the full Tesla bullish thesis plays out, you know, if they end up keeping the dominant market share in electric vehicles, if they end up being the #1 player in self-driving technology, if they end up being the #1 or one of the main players in robo-taxis and building out their robo-taxi network, do you really think their valuation is still going to stay at the $280, $300 billion mark that it's been hovering around here now, when we have companies like Amazon, Microsoft, Apple that are at near $1 trillion or over $1 trillion, when Tesla is only down below $300 billion valuation? Do you seriously think that the valuation will stay at where it is? Yeah, no, I don't think so. So I'm still very bullish on Tesla, still expect it to go to the moon, still a lot more growth ready in this stock, still gonna grow at great rates for years into the future, I reckon. So I'm still holding my Tesla shares, no change. That's what I obviously still think there though, guys. What do you think will happen with Tesla stock? What are you guys doing if you're a Tesla shareholder? You buying, selling, holding? Let me know in the comments. I would love to know your opinions on Tesla. It's always a fun company to talk about, so leave them in the comments there. But that's pretty much all I do have for today here, guys. As always, if you did like the video, consider hitting the like button, obviously. Duh, if you like the video, why don't you show me? Anyway, as well, like I said at the start, if you did enjoy, please hit this circle here to subscribe. Check out the Tesla video and my playlist on all the other Tesla videos that I have done before on this channel. That's all I have for today, guys. You have a good one.